Imagine retiring in just a decade, only to realize your investment portfolio isn't delivering the income you need. Terrifying, right? That's exactly why I decided to put ChatGPT to the test, asking it to craft the perfect self-invested personal pension, SIPP, focused on dividend-paying stocks. But here's where it gets controversial. While AI can crunch data, can it truly replace human intuition when it comes to something as critical as retirement planning? Let's dive in. I've already built a SIPP primarily composed of FTSE 100 stocks, and for the most part, I'm satisfied. Yet I couldn't shake the feeling that it might not be optimized for my retirement goals. So, I turned to ChatGPT, requesting a portfolio tailored for someone like me, someone seeking steady income in the next 10 years. Spoiler alert, the results were interesting, but not without flaws. First, a word of caution: AI isn't a financial advisor. While it can provide insights, its data is often outdated, and it rarely flags potential risks. Human judgment remains irreplaceable. That said, ChatGPT's initial response was flattering, calling my request a great question. I've learned to take its compliments with a grain of salt. It started by suggesting 5 stocks, despite my request for 10. The first on the list? Legal and General Group, LSE, LGN, which it praised as a high-yield financial/insurance giant and a top FTSE 100 dividend payer. I can't argue with that. I already own it, and its trailing yield of 9% is undeniably attractive. ChatGPT called it a compelling pick for stable cash generation, ideal for retirement income. Fair enough. But this is the part most people miss. ChatGPT's risk assessment was painfully generic. It warned about high yields being hard to sustain, long-term liabilities in insurance, and the need to monitor cash flow. Useful, but nothing groundbreaking. It also ignored Legal and General's lackluster share price performance, up just 8.4% in the last year, and barely higher than a decade ago. Still, for income, if not growth, it's worth considering. Next up, ChatGPT recommended MNG and Phoenix Group holdings, both from the financial sector. While their yields are impressive, including 3 financial stocks in a 5-stock portfolio screams overconcentration. Is this a red flag, or am I overreacting? Let me know in the comments. It also suggested British American Tobacco, a solid pick with a proven track record of income and growth. But then came the wildcard: Foresight Environmental Infrastructure Trust, a FTSE 250 trust with an 11% yield. Sounds great, until you realize its shares are down 15% in the last year, and a staggering 48% over 3. Risky move, or hidden gem? You decide. Clearly, 5 stocks weren't enough for a balanced portfolio, especially with 3 from the same sector and 1 high-risk pick. So, I asked for 5 more. ChatGPT delivered Shell, Unilever, National Grid, AstraZeneca, and Rio Tinto, a mix of income and growth. Not bad, though Unilever and National Grid don't excite me personally. Here's the takeaway: ChatGPT doesn't create ideas, it regurgitates human-researched information. While its suggestions weren't terrible, they lacked the nuance and creativity a human investor brings. And this is the part most people miss. There are far more exciting FTSE 100 income stocks out there. AI can be a tool, but it's no substitute for doing your own research. So, what do you think? Would you trust ChatGPT to help plan your retirement portfolio? Or is this a job best left to humans? Let's debate in the comments. I'm all ears.